What is up, everyone? How's the day going? I feel like we're kind of in the indeterminate period of the semester. We're getting ready to have an exam, but everybody's just kind of like, just we're at the top of the hill, but it's not really downhill. It's just more uphill, and yeah, I don't know. Maybe it's perspective, but we are close. We're in the middle of week 9, which means we're over halfway there. So that's good news. The unfortunate news is that we do have another exam coming up. So, we've already talked about that. I won't rehash everything. I'll just say, make sure you're prepared for the exam and do some bit of study. You should be fine. Some announcements. Today at 3:30, we're having a True Biz Forum. It's going to be over in BH 1000. I believe we're starting with the bridge ceremony, which pretty much everybody in this room, I'm assuming, has already done the bridge ceremony. Although that's always hard to tell because usually it was every semester and then they went to like once a year and then I think they're back to once a semester. I can't tell. That's for minds smarter than mine. But we're going to have a really good panel, really diverse panel of professionals to talk about different opportunities. It's also a good opportunity if you have any interest in the areas that these people are involved in, for you to reach out and ask questions. These are always really good sessions when they do these. The moderator does a really nice job. And if that's not enough, okay. So first of all, you can actually use this for your write-up for your professional interaction if you've not already got one of those events put forward. So something to think about today to go to that. And as a bonus, you get to see me in a suit, okay? Which most people don't actually get to see that because I despise suits with every fiber of my being. But I do put one on for the bridge ceremony presentation. So I've actually got it hanging up in my office. I'm trying to put off putting it on until as far as possible, but I have to do DSP composite photo today too. So the good news is that's 2 birds with 1 stone. So that works out well. And then also, this is particularly relevant for those of you who are looking for job opportunities. I was contacted by a former student who is working at Reuben Brown, and a slew of former Truman students who currently work for Reuben Brown, which is a lot of them, are actually going to be networking on October 30th. So it's Wednesday. It's in a few weeks, and they're actually going to be at the Wooden Nickel. So free appetizers, drinks, and networking with Reuben Brown. That's trifecta right there. That's like food, drink, and you develop your professional network. That's like the best possible opportunity. All the people there, I think most of the majority, there may be 1 or 2, I don't know, but the majority of people that are going to be there are former students of mine. So you can ask, say, was Barnes as bad back then as he is now? And they'll say, yeah, he was worse. Yeah, and so you can find out a little bit about the operations of Reuben Brown and get some food and some drink at the time. And so something I think you should take advantage of. You can parlay that into moving out of this session, waiting an hour, and then go over to Wooden Nickel and enjoying an afternoon of opportunity with them. But if you have free time and are looking for a position, I strongly recommend this one. I have a high opinion of Reuben Brown, as I do of the people who work there. All right, today we are in our last chapter of content before the second exam. We're going to be talking about assurance attestation, and as an additional bonus, like the cherry on top, we're going to talk about internal auditing. Only because it's in the chapter. I don't think it particularly fits well with this discussion, but we'll talk a little bit about it. I do think that this discussion is really important to have because we've talked about the concepts of assurance and attestation already, but it's really important to delineate how they're different from auditing. And the interesting part is we spend the majority of this course talking about auditing. We're only going to spend today really talking about concepts that are related to auditing, but are not auditing themselves. And for context, those of you who are wondering what this is going to take what part of this is going to take up on the exam, this is probably going to be 1 or 2 multiple choice questions at most on the exam. This is primarily informative for you guys to actually understand a little bit more about the operations that you may be working on in your careers. And so if you actually had an internship with an accounting firm and you did audit, no, not this again. Oh, goodness gracious. Hang on a second. I'm assuming they were not clapping at the concept of audit or assurance and attestation. That was my assumption. But if you've ever worked in an internship or done work with a public accounting firm, then you probably did not work in the auditing practice. You worked in what they call the assurance practice. And the interesting question is, what's the difference? So we're going to answer that question today. So let's go ahead and talk a little bit about something that we already know about. This is actually from our first set of slides back in chapter 1. Remember, auditing is a specific series of tasks that at this point in the semester, you all are well aware of and acclimated to. At least I hope that's the case. Then we're going to talk about attest and assurance as the wider ovals and what those represent. This is kind of the basic diagram. This isn't a more detailed diagram. Again, there's only going to be 1 or 2 questions on this whole set of slides on the exam. So I'm not going to ask you detailed information about the slides. You don't need to memorize this. This is mostly informational. I will kind of tell you the things that I think you should focus on, because I think that there's some specific areas that I think are important to remember. This is not one of those. This is just kind of shows you the scope of what work is done in attest and what type of work is done in assurance. So let's talk about some definitions and make sure that we understand how they fit in context. So hopefully we know what auditing is. And if you are looking for a definition of auditing right now, I'm going to send you a link to every video that I've done in the course or the semester. So that's auditing, okay? Everything we've talked about so far. So what is attest services? And these were when a practitioner has occurred to engage to issue or does an examination, review, or agreed upon procedure report on a subject matter or an assertion about a subject matter that is the responsibility of another party. Now that sounds an awful lot like an audit, and it is. An audit is an attest service. It is a very specific attest service that provides assurance over financial statements to the stakeholders of the organization, okay? That is the definition of the audit. So it does fall within the context of attest services. So we can say audits are a form of attest services, but we're going to talk about attest services that are a little bit more broad in context. They're not necessarily restricted to auditing of financial statements or internal controls. Then the most broad are going to be assurance services that are independent professional services that improve the quality of information or its context for decision makers. Again, it sounds an awful lot like an audit, but this is a very broad definition. I want to be fair and say we're not going to cover all possible assurance services that are out there. We're going to cover a few different subsets that kind of comprise a big section of assurance services. Some that I think that are most important to cover. But these are things that we're going to be talking about with respect to the types of services and the types of engagements that can be performed. Now, just so we know what we're going to be looking at, we talk about audit engagements. We're generally focused on the associated standards of the Statements on Auditing Standards, SAS, which that's the ASB, Auditing Standards Board. For context, when you hear me use those initials, ASB is Auditing Standards Board. That's the board themselves. SAS are the Statements on Auditing Standards. Those are the standards passed by the Auditing Standards Board, okay? Then when you hear me say PCAOB, Public Company Accounting Oversight Board, they're the public company auditors, and they pass PCAOB auditing standards. So PCAOB is just PCAOB, but Statement on Auditing Standards is ASB. And that covers everything that we covered in the chapter. We actually don't cover chapter 19, which has to do with professional liability and responsibility. But other than that, we covered everything chapters 1 through 18 in this course. And attest engagements and assurance engagements, they're going to be covered by chapter 21. Very, very minimal coverage. So we're going to be talking about attest engagements that are governed by Statements on Standards for Attestation Engagements, which are SSAEs. And then the other assurance engagements are going to be governed by SSARS, Statements on Standards for Accounting and Review Services. And so when you hear me refer to a certain set of standards, that's the type of engagement that we're dealing with. And again, focus of this course by far is going to be on that first line. But for today, we're going to talk a little bit more about this. I do want to throw out a particular note here because this may come up. When we talk about auditing, it's generally contextual for me to refer to auditors, okay? Because those are people who are conducting the audit engagement. When we're talking about people who perform these engagements, we generally just use the term accountant or CPA, okay? That doesn't mean that I won't say auditors occasionally, because I say auditors 95% of the time in this course. So if I use the term auditor when talking about this engagement, that's just a faux pas. That's me using the wrong term. These are the accountants or CPAs because they're not performing specifically auditing services in this context. All right, parties in an attest engagement. I use this joke all the time and it never fails to not get a laugh. All right, so who are the parties in attest engagement? Basically we've got the user and the responsible party have a relationship, and the CPA is providing assurance to the user of that information. Now this should look really familiar. This looks exactly like our principal agent diagram, okay? So if we're talking about the agent, the agent, that's the responsible party, the management. Talking about the principal, those are the ones who use the financial statements, and the auditor sits over here. So it's just a general expansion of the agent relationship that we already understand. And so this is just kind of a more broad view of this particular relationship that we're already familiar with. All right, so let's go ahead and let's look at the first table. So I'm going to have some tables that I'm going to put up in here. And when you see a table like this is a good table for you to study for the exam, because it's likely that my information I ask about will come from these tables. There's going to be 3 of them specifically that I think you should focus on. So this is basically an overview of attestation engagements. Now, when I talk about attestation engagements, I'm going to have 2 terms that I'll use. I will talk about engagements, and then I will talk about services. And so it says below, a type of engagement refers to the general level of services provided, whereas attached to services refers to the specific attest procedures performed. So an examination of pro forma financial statements would be an engagement, and then specifying the service that's provided in that engagement. We'll get to the services here in just a second. They are a little bit confusing with respect to the engagement, but the engagements are pretty straightforward. We've got 3 types, okay? We've got examination, review, and agreed upon procedures. Now, an examination is basically what we consider to be audit level testing, okay? It provides very high levels of assurance with low levels of risk, which is consistent with what we understand in an audit. It also issues an opinion, and for the most part, the report distribution can be either general or limited, depending on the scope of the examination. So when you think of examination, you should just think it's an audit, but for attestation services. Then we have in the middle, we have what are called reviews. Reviews are substantially less in scope. They tend to provide moderate levels of assurance and moderate levels of risk, okay? The type of report is going to be a limited assurance opinion, or a limited assurance, as basically expresses negative assurance. In most reviews, they don't even call it an opinion, they call it a conclusion. And we'll see that example here in just a little bit. And they can be general, limited, and distribution as well. Agreed upon procedures, these are kind of the ones that are they're the lowest level in scope. Down here in this chart, it says variable. You can kind of think of this as, in most situations, level of assurance will be low or none, and the attestation risk is going to be high. Is that possible to adjust those? Absolutely. Okay, we can perform agreed upon procedures, but agreed upon procedures are very scaled back procedures in general. They tend to be something that's not nearly as rigorous as a review. Okay. The limit or agreed upon procedures do not provide an opinion. They just provide a summary of findings. Okay, so opinion, conclusion, and then summary of findings. That's kind of how we characterize these right here. And they're always limited in distribution. They are meant specifically for the audience who actually engage the agreed upon procedures. Now, we're going to talk a little bit more about those in just a second, but agreed upon procedures, it's really hard to kind of characterize what those are. Basically, the way to think about this is that if it's not an examination, if it's not a high level of rigor, or if it's not a review, it's not a moderate level of rigor, then it's going to be the lowest level of rigor. That's going to be our agreed upon procedures. That's basically a customized engagement to the scope that you personally desire. Usually, they're much less a level lower insurance, and they're much higher in risk than these, though that can be tweaked, like I said. All right, so these are that's kind of the delineation of all of our engagement types. Now, I said that there's 2 components. There's the engagement and the service. So let's talk about each of the services that can be performed here. So we have 6 of these. All right, and the first one is completely confusing because it's also agreed upon procedures. Now, in this context, when we talk about a service in this context, it's important to note I'm talking specifically about agreed upon procedure service, okay, which is basically specified a report to agree to engage to report upon specific agreed upon procedures. Which the way you can think about this is just a customized audit. This is saying I want to look at specific parts of the organization or specific parts of the financial statements. I don't want to look at everything. That's the easy way to think about agreed upon procedures. Now, this is really confusing because I said it's both an engagement type and a service. When I'm referring to the service, I'm referring to specifically this type of service performed. When I'm talking about the engagement, I'm talking about this scope of services provided. The reason this is important is it's the services we're about to look at. Several of these can also be performed at the agreed upon procedure level, okay? Which doesn't mean that we're doing these tasks specifically, but that we're customizing to minimal coverage, or to specific coverage. So predictably, the types of attestation engagements we can perform here, agreed upon procedures. Agreed upon procedures service to perform agreed upon procedures, which again is silly, but that's the ACCT for you, okay? The next one's a little bit more straightforward. This is prospective financial statements. Prospective financial statements, these are forward-looking financial statements, not based on historical cost. And keep in mind, when we talk about it from this context, this is not preparing those items, but this is actually performing adjust services on these, okay? So again, similar to an audit, if we were looking at an audit of financial statements, this would be an audit of prospective financial statements, though we wouldn't call it an audit, we called it something else. What do we call it? Well, we could call it either an examination, which is effectively an audit, or agreed upon procedures. Now, it's important to note, I made this note that we can actually perform preparation and compilation. We will get to those in a little bit. This is going to be a little bit of a distinction. In this context, we're performing the assurance service. A little bit later, or we're performing the attestation service. A little bit later, we can actually also prepare and compile financial statements ourselves. But that's a different type of service that we perform in that situation. In this situation, we're just talking about looking at the respective financial statements and see if they're free from material misstatement. Also, we have pro forma financial statements, which we've talked about already in this course. These are projected financial statements based on assumptions about future options. Okay, these are also not based on historical cost. So these forward-looking, these are often used in times of crisis, whenever there's a massive subsequent event, something to look and see how things are predicted to change over time, as we note particular instances that happen. These are similar to prospective financial statements, but they incorporate certain future assumptions or certain future options that may happen. All right, so and with respect to types of attestation engagements, we can perform examination, and then we can also perform a review. Okay, now this is a little bit of a picky point. Okay, both of those types, both prospective financial statements and pro forma financial statements, can perform at examination level. But the lowest level we can perform for pro forma financial statements is the review level, which is still going to be at least moderate assurance or a limited level of assurance. Whereas when we talked about the prospective financial statements, we could perform that at the agreed upon procedures level, which is almost no assurance, if no assurance whatsoever. All right. Fourth type, we have compliance. And compliance, we know, are laws and regulations. Compliance with associated laws and regulations. So this is basically looking at whether or not the organization is following the rules of their industry. Types of attestation engagements are examinations and agreed upon procedures. Okay. So we can perform examinations of compliance to laws or regulations, or we can just perform a specific testing of certain rules that are specified by the client. Then we have something that you probably have heard before, but didn't know that we actually do particular engagements in this area. We have management's discussion analysis. Have you all seen that section in the financial statements in the 10K? Those are usually a long section that talks about particular areas that management thinks important to highlight with respect to the operations of the organization. We can actually perform services in this area, perform engagements in this area. So verification of comments made by management relating to the financial statements. How do we perform engagements? Well, examination. So you're trying to see a trend with it. 2, 3, 4, and 5 all have examination level performance. And this one can also be done at the review level. Okay, so moderate level. And then finally, something that we've alluded to, but want to make sure we have context with, is going to be service organizations. Remember those SOC reports that we talked about back in internal controls? Okay, we can actually perform those types of reporting as well. And so this is testing and controls and operations at organizations that provide services to clients. So when we talked about it back in chapter 6 and 7, we talked about it as we are the auditors who are requesting a SOC report from an external a client, somebody who provides services to our client. Okay. In this context, we're talking about we're the auditor of the company that performs those services. So we're the ones actually creating the SOC report. We're the ones who actually create that document for future use. And as I said before, when we talked about in chapter 6 and 7, we were only concerned about one type of SOC report. That was the SOC 1 report. I shouldn't say what one type, one category, because there were 2 types in that category. But in this context, we have multiple different types of SOC reports that we can prepare as the accountant for the client. There are 3 different numbered SOC reports, plus there's 2 separate reports on special topic areas. And if one of the groups in this class decides to report on SOC reports, you'll get to hear all about it at the end of the semester. Isn't that great? All right. So what are the types of engagements here? In this one, it's an examination only. So that might be a useful tip for you to know, is to make sure that you know that all types, except for agreed upon procedures, all types of services can be performed at the examination level, which is high levels of assurance. But I did provide a table for you. You can thank Becker for this table. I did shamelessly copy and paste this from Becker materials so that you could actually know this. I might ask you some questions in this area, but it's going to be very minimal. Again, I do think that for the most part, this is not particularly critical, but it's still something that's relevant. So this is the second table that I think you should look at before you prepare for the exam, something to consider. All right. So given that auditing is a form of attestation, there are several similarities between them. The first and most obvious similarity is going to be that an examination provides level of assurance comparable to an audit. And so what type of assurance do we say that we kind of default at for audit? What do we refer to that again as? Reasonable assurance, okay? Reasonable assurance is our highest level of assurance. Examination provides reasonable assurance, all right? That's kind of how we discuss high levels of assurance. So when you see that term assurance being used high, we're saying that's reasonable assurance. Also, attestation standards are comparable to generally accepted auditing standards. We've referred to generally accepted auditing standards, but we haven't looked at them specifically. To be honest, I think that it's not a particularly relevant point. It doesn't help with your knowledge of auditing procedures, but the generally accepted auditing standards generally have three categories. They have three categories. One of those is general, one is field work, and one of those reporting. Those are auditing standards, and those are the same type categories of standards that are used in attestation standards as well. And then also the attestation risk model is virtually identical to the audit risk model. The only difference is the AR here now stands for attestation risk instead of being audit risk, which leads to an interesting issue, okay? First of all, we may actually have no control over this particular point right here. And that was not a pun, by the way, I just used that word. We don't have any control over control risk because we may not test controls in an engagement. So we may be saying risk and material misstatement is high in every single scenario. That may just be a default. But probably the more interesting one is, what did we say audit risk was in almost every scenario? So it's low or very low. So remember I told you all to think of audit risk as a constant, okay? That is not true when we think about it for attestation. Attestation risk can be any level. It can be low, medium, or high, which creates a lot of pandemonium with the relationships over here, because then we have to think about how detection risk is affected not only by risk and material misstatement, but also by attestation risk. Thankfully, I'm not going to ask you to do that on the exam. This is one of those things I will not test you on. This is just, again, like I said, informational, but it's kind of interesting to think about because it does create some unique scenarios that you would not counter in auditing. All right. So what do attestation reports look like? So they're similar to financial statements audits. Attestation engagements require the CPA to prepare a report on their findings. And they tend to vary dramatically in detail, but have a similar set of elements. Now, if you are planning to sit for your CPA exam, this will be an area that you have to spend sufficient time on because for some reason, so the AICPA is still really focused on making sure that people who take the CPA exam know the format of the reports, which I think is kind of silly because you're not going to be memorizing that for the most part. The most I'm willing to go into is saying they know the contents of one report and all its variants, which is what we talked about on Monday. But the AICPA says, hey, know the contents of every report, which is ridiculous. But that being said, you do need probably have some knowledge of what their contents are. So they all contain a title, a heading, they all contain an introductory paragraph, they all contain a scope paragraph, and then they will result in a conclusion. And I alluded to this already, okay? With the examination, the conclusion is called an opinion, just the same way it is talked about in an audit. We use that term to express an opinion. When we issue a report, an opinion is expressed with reasonable assurance. For all the review reports we're going to talk about, they are referred to as a conclusion. Now, what's the difference between an opinion and a conclusion? The answer is they're different words, okay? That's basically it. You could actually say that they still issue an opinion, but they use a different terminology to kind of separate out to say this is a different type of report. Conclusions generally provide lower levels of assurance in what they're trying to report on. So if you think opinions generally can be considered high level assurance, conclusion is medium or limited assurance. That's about the only distinction there, and that's only for perspective from assurance and auditing. If you use those terms in the vernacular in the real world, says, I came with an opinion about something. Somebody might have said, oh, you might came up with a conclusion. Don't criticize them and say, no, those are two distinctly different terms, okay? I know that's confusing in this course, but in the real world, people might use those terms interchangeably. You never can tell. All right, so yeah, conclusion, opinion, and then agreed upon procedures, as I alluded to. A lot of the situations we're about to look at, we're going to find that there's no assurance provided, okay? And that's just usually using the terminology that they are not expressing an opinion, okay? Think about this as a disclaimer of opinion type of scenario where we don't issue an opinion. In an audit, we generally think that's bad because we can't do our job. All right. In the situation of agreed upon procedures, saying a disclaimer of opinion is the natural state because we were not engaged to express an opinion. Okay. So that's kind of what they're trying to say right there. We don't issue an opinion. We don't issue a conclusion. This is just what we found. Draw your own conclusions or make your own opinions, whichever you want to say. All right. So that covers the stuff we want to talk about for statements on standards and attestation engagements. Again, our focus is going to be on the different types of engagements, the different types of services, and how those overlap. Now, what you do with those, don't worry too much about those. We're not going to be going into practical application of those. It's mostly just to understand at a basic level. Now we're going to talk about assurance. It's going to get really confusing here in just a second. So if you are not clear on what I'm saying, feel free to stop me because I'm going to use the terms assurance and attestation. And I mean those literally. It doesn't mean that I'm referring back to attestation standards, but assurance standards actually use both terms and they have specific meaning for both of those terms. Okay. So let's go ahead and talk about the three categories of assurance services under statements on standards of accounting or reverse services. So both Messier, Glover, and Perot, which is our textbook, and Becker, they identify these three categories, and these are the three that you need to be aware of. The first of these is called a preparation, okay? And this is what I was alluding to before. Under attestation standards, we can perform reviews or examinations of certain types of financial statements. So we can perform engagements over certain types of financial statements. We're the ones who are looking at those financial statements and determining if they're substantially correct. In this scenario, a preparation says we're the ones who are putting the financial statements together. By definition, it's preparing a client's financial statements in accordance with a specified financial reporting framework. We usually default in, because we're accrual-based accounting, and that's what you all have learned in accounting, we usually default according to generally accepted accounting principles. But as we learned on Monday, there's a wide world of different types of accounting principles or different reporting frameworks we can operate on. Some of those are great. You know, I think cash basis is really underutilized. And I personally have the opinion, I've long stated this, accrual-based accounting is not only confusing, but it leads to fraud, okay? And we should all go back to cash basis. Nobody agrees with me, okay? We should all, I think we should, but nobody agrees with me. But it's really hard to commit fraud when you only recognize expenses and revenues when cash trade changes hands, okay? It's like, it's very hard to recognize $1 billion in revenue if you don't have $1 billion, which a lot of people will frown on. Says, but I do have $1 billion in $1 billion in revenue. So let's go, okay, show me the money. Show me that. I can't believe I just quoted Jerry Maguire. I'm just really upset with myself right now. All right. So some interesting notes about this. Obviously, we talk about preparation, specified reporting framework. So whatever the client specifies that we're going to be reporting on, we'll follow the rules of that reporting framework. If we're talking about GAAP, we're all experts in GAAP because we've all been taking courses for many years and learning about that. If it's something else, we'll have to learn as we go. That being said, this is one of those few scenarios where an assurance professional does not need to be independent of their client. They can perform a preparation and have a vested financial interest because they're not expressing any type of assurance and opinion, okay? However, there is no report or opinion provided. And I want to specify this because this term will come up. It comes up in the book and it will come up if you're preparing for the CPA exam. Generally, they consider the reporting step to be an attest function. They say, is there an attestation? When they say that, they're meaning, did you issue a report? Okay. And then when they say, do you provide assurance? They're saying, did you provide an opinion? Did you issue an opinion? Neither one of these is given in a preparation. We don't issue a report. We don't issue an opinion. We usually issue a statement that talks about how we prepared for something. That's just to say, here, we did a job. Okay, you're welcome. That's basically the extent of that particular item. But it's not a report. It's no attestation made. There's no opinion made. There's no assurance provided. Okay. The next of these is going to sound very similar to the first. This is called a compilation. And again, if you talked about this in the real world, if you said, I prepared financial statements, somebody might say, oh, you compiled them. And says, no, I did something completely different. They're going to say, what's the difference? Okay. There is a difference for our perspective. From an assurance perspective, a compilation means that we present financial statements based on the representations of management. So keep in mind, in the previous one, we were preparing financial statements just based on what the framework tells us to do. And to this one, we're compiling financial statements based on what management tells us to do. Presumably, they still have to follow the rules of their reporting framework, but certain estimates or certain conclusions they may reach may not have been apparent under the other scenario. So keep in mind that when we talk about financial accounting, that there's a whole bunch of different estimates that have to be made, a whole lot of subjectivity. A compilation takes into account management's interpretation of subjectivity. Preparation does not. Compilation does include that. Okay. So this is an interesting one in that independence is not required for compilations either, but you'll notice there's a star and then a whole bunch of really, really small text below that. So if you can't read the text, let me read it for you. Though an explanatory paragraph must be included in the report stating the CPA is not independent. So in this situation, you do not need to be required, or you do not need to be independent of your client. But if you perform a compilation and are not independent, you do have to clarify that in your report, which probably leads to an interesting point. Is a report required? The answer is yes, a report is required, okay? But no opinion is provided. Yes?
You're providing these services, I'm guessing you're not allowed to audit the same clients.
That is true, yeah, because there's that would be auditing your own work effectively, yeah. So yeah, it's an important point, yeah. That's one reason why a lot of times when we talk about what auditors can and can't do outside of audit services, a lot of these engagements are forbidden in type, especially if they're ones that would result in you doing assurance over the own work that you provided. So, all right, so that was two. The third one, this is going to get really confusing. This is a review, okay? Now, I want to delineate this one, okay? It is very similar in nature to an attestation standards review, okay? When I talk about a review for this particular context, I'm referring to a review of a client's financial statements, okay? Now, when we talked about a review for statements on standards of attestation engagements, SSAEs, we were talking about review in multiple broad contexts, okay? We're talking about a review of disclosure. We're talking about review of compilation, talking about all different types of review possible services that could be, or all possible services that you can be provided. I guess, yeah, yeah. So those would be actually broad-based review reports. This is specifically a review of financial statements provided by the client. So think about it as basically an audit of financial statements, but toned down a bit, all right? These are the standards that we would utilize. It's also important to note, and this is things will get really confusing because we use the term review a lot, okay? We're talking about broad reviews that are not restricted to financial statements. We're talking about statements on standards for attestation engagements. If we're talking about reviews specifically of financial statements in substitute of an audit, in place of an audit, we're talking about statements on standards for accounting and review services. What if we, as an auditor, also perform a quarterly review for the client? So we perform the financial statement audit, but we also perform a quarterly review of their work. That's where things get really, really dicey because that's considered to be an interim review, which is different from all the other two reviews. And they follow the standards of whatever audit standards you had to follow. So if it's a private company, you have to follow the statements on auditing standards, the ASB standards. If it's a public company, you follow PCAOB standards. So has everybody got that? Reviews can actually follow 4 different sets of standards. So yeah, simple, right? Simple. Don't worry, I'm not going to test you specifically on that, but it's important to know, it's important to follow that, okay? So again, like I said, a review in this context is specifically over clients' financial statements, that they're in conformity with a specified financial reporting framework. So presumably GAAP, but it could be something else. And they express limited or negative assurance, okay? So not the highest level assurance, not the reasonable assurance, but a moderate level of assurance. So this is a toned down audit is the easiest way to think about it. And it's just going to be over financial statements. Independence in this context is required. This is the one state or SSARS service that we will say independence is required, which makes sense because we're issuing an opinion. Okay, we are issuing an opinion in this situation. Report and opinion are provided, so we're providing an attest function and also providing assurance in this context. All right, is everybody thoroughly confused now? Because if you're staying up with me, great. If you're thoroughly confused, that's where I expect you to be right now. Okay. The important thing to remember is that we've got those 3 engagement types, and the summary of this is going to be in this table right here. This is table number 3, by the way. These are the 3 important tables that I told you about, okay? And I also mentioned SSARS do not apply to reviews of interim financial statements whose non-issuers audited financial statements. I said SASs, that's for private companies. For public companies, it would be PCAOB standards. I just haven't updated the slides to say that, okay? But again, that's just a note. What I want you to focus on is the information up here and the detail up there, as well as understanding what the types of services are that are provided. Okay. Just for context, I do want to make sure that we are clear on assurance levels. So when we talk about reasonable assurance, we're talking about audits. Okay. Absolute assurance, again, is that end of the spectrum where we can't reach. It's not possible. We can only achieve to 90 to 95% assurance. Okay. That's our expectation. This is audit. This is also where an examination would be under statements on standards for attestation engagements. All reviews generally fall at limited assurance. We can also say certain compilation engagements. Remember, we talked about those a little bit on Monday. Compilation engagements will generally fall here. And then no assurance basically means we are not providing any type of opinion whatsoever. We're just doing the service, and you actually make your own judgment about that, draw your conclusions. Okay. No opinion is provided. The opinion provided here is generally called a conclusion. This one's actually referred to specifically as an opinion. But the level of assurance is really, really important for understanding the types of engagements that are listed. Now, while preparation and compilation are similar in audits and they're all assurance services, that's effectively where similarity ends. In other words, preparation and compilations have very little in common with audits. That being said, as the level of assurance increases with the type of service provided, the more closely the service resembles an audit. So let's take a look at see how reviews under SSARS resemble an audit. And there is a lot to go with here. Now, again, I don't tend to test on this information. There is one particular item that I would like to make sure you make note of, and it's possible I might ask you a question on it, but I will specifically point that out. So what are the similarities? Well, under both, you have an engagement letter. You have to obtain an understanding of the client and its operations and its controls. You perform analytical procedures and other assurance procedures, okay? Under review, they specifically talk about both analytical procedures and inquiry. So those are the two types of evidence that you gather in a review, inquiry and analytical procedures. You do need to evaluate the results. You do need to communicate the results, and you have to prepare a management representation letter. Remember that management representation letter? That's the weird one that the auditor prepares, but then the manager signs it. It's like it's written from the manager to the auditor. Yeah, they both do that. However, there's some differences. If you perform a review, you do not need to communicate with the predecessor. You can just start tabula rasa. I was trying to remember that term, blank slate, and just move straight forward from there. We don't assess fraud risk. Our goal is not there to determine whether a fraud has happened in a particular engagement. We're just there to perform the review. The one that I said that I think you should remember, because this is a really important one, under reviews, there are no tests of controls, okay? Which is, again, was that interesting effect. Remember, we looked at the attestation risk model and we said control risk might affect this. In some engagements, you don't test controls, so you can't assess control risk, okay? Or at least you can't determine control risk. And there's no audit procedures other than the types of evidence that we talked about before. You don't actually perform things like confirmations, you don't perform reperformance or recalculation. You're solely restricted to inquiry and analytical procedures. And that's why it's a lower level of assurance that's being provided. All right. I do think it's important to talk about the next point, because this is something that's that will come up in your careers. I want to talk about review reports. Now, these are qualitative similar to the standard unmodified audit report, which includes the CPA responsibilities on our new information, but there are some important differences in a review report versus an audit report. First of all, they specifically refer to analytical procedures and inquiries. Those two types of evidence are specifically referred to in the report. It does use the actual language that a review is substantially less in scope than an audit for context. So it's basically audit junior, okay, for lack of a better term. I hate saying that because that seems like anybody's last name junior is less than their parent. And I'm a junior, okay? So yeah, okay. Audits, a minor audit, okay, smaller audit. Specify the review was conducted in accordance with statements on standards for accounting and review services, okay? SSARS has got to be specified in the report. And it expresses negative assurance, which is actually the actual terminology used is, we are not aware of any material modifications. Instead of saying the financial statements are free from material misstatement, we say we don't know if there are any things, we don't believe there are, okay? Let's go ahead. I want to take a quick look at the example report. Now, I pulled up Becker here because they've got the cleanest examples of these. Oh, come on. They logged me out. Pause. All right, we're back, okay? So here's an example of the standard review report, and I just want to point out the elements that we talked about before, okay? So remember, they said that a review includes primarily applying analytical procedures to management's financial data and making inquiries of all company management. So it refers to those two procedures specifically. A review is substantially less in scope than audit, the objective of which is to express an opinion regarding the financial statement as a whole. Accordingly, we do not express such an opinion. So remember, a review is specifically referred to as conclusion. Okay, the ending statement on the review is a conclusion. They delineate that from here in the language of the report, and this is consistent with all reports in this area. All right. Moving down, based on our review, we are not aware of any material modifications that should be made. That's the example of that negative assurance that we talked about. They're not making a positive statement, they're making a negative statement. It says, we didn't see anything wrong. Does that mean there's nothing wrong? It just means that we didn't find anything, okay? Which is substantially going to be less with respect to that assurance. We're going to come back to this in just a second because there's some interesting changes that have happened in this area. So it used to be that a review report only had one flavor, okay? And that was just standard straight up review report. And when I started teaching this class, that's the way it was. And recently they've actually done a lot of changes to the nature of review reports. So I said that there are two general types of modifications. This is actually going to be an example of two types of modifications in a leader review report. And this is currently in the textbook, is listed as departure from GAAP. The reason I bring this up, and again, this is informational, I'm not going to test you on this, but I do think that you should know about this, is that now in current day and age, this is only a few years old, they actually can issue different categories of opinions on review reports. So if we talk about a regular review report, that's going to be kind of perceived as an unqualified review report. They don't use that term unqualified, they just say a standard review report. If there are material modifications from GAAP that are observed during the review engagement, the auditor has the ability to issue either a qualified conclusion or an adverse conclusion, which is pretty consistent with the way we think about opinions that are issued in audits. So just as a quick context, or a quick item of context, this is fairly new, but this is a sample report of a re-report with a qualified conclusion, which is just very similar to our original report. I do want to note the language that's used at the end, okay? So based on our reviews, except for the matters discussed in the basis of qualified conclusion paragraph, we're not aware of any material modifications. So it's very similar to how we think about an audit. It uses that except for language. Also, did everybody notice that the opinion is actually at the end of the report instead of being at the very first paragraph? That's the way I like my novels to read. Okay, I want the story arc to conclude at the end of the story, not cap at the beginning. That's like watching that movie Memento, where you have to what happened at the very beginning. You have to figure out what happened. Anybody ever seen that movie? Man, I'm old. All right, yeah. So, and then adverse opinion. Okay, adverse opinion. Based on our review to the significance of matters described in the basis of adverse complaint paragraphs, the financial statements are not in accordance with accounting principles and generally accepted in the United States of America. So that's similar to our statement, the adverse opinion for the for audit. Financial statements do not present fairly in all material respects. So basically issued in the same type of language. And it's interesting that we've actually moved to that point because it looks like the reviews have kind of evolved to the point where we can actually identify these types of issues. So departure from GAAP is one type of modification note, and it can actually result in a different type of opinion or report issued altogether. The other general category, and this is not exhaustive or comprehensive, but these are the two main categories, okay, is going to be a going concern, all right? And if we identify a going concern issue with our client, we have to actually disclose that in the review report. Now, interestingly enough, this brings up an interesting point, interesting question related to this. So before we talked about going concern, and we say that this results in a change in the audit report, but it doesn't result in a change in opinion. But I specified what happens if our client does not disclose the going concern issue, the substantial doubt about their ability to continue as a going concern. Would that affect the opinion? The answer is yes. The same is true in this situation. This assumes that a going concern is properly disclosed. We as the accountant also have responsibility to disclose that in the review report. But if there would be a situation where the client says, we don't want to disclose this going concern, that would be a departure from GAAP because they are required under GAAP to actually make that disclosure. So the same holds true in this situation. If they did not report this going concern, our client didn't, we'd be back up here to a departure from GAAP where we would issue a qualified or an adverse opinion, depending on the severity. So this is assuming that the going concern is properly disclosed and reported by the client. We will disclose and report that in the financial statements too. All right, real quick, let's wrap up with internal auditing, okay? Internal auditing is an independent objective assurance and consulting activity designed to add value and improve an organization's operations. Now, basically the way to think about internal auditing is that they perform a lot of the tasks that we would like to see performed as external auditors internally for the client. They're going to be very responsible for making sure the controls are active and operating properly and making sure that operational responsibilities are consistent throughout the period. They work consistently and continuously with a client. They often perform a task called continuous auditing, continuous monitoring, CACM, and their responsibility will vary greatly in scope. It's not just going to be that external financial statement audit that we do as external auditors. They may have responsibilities that relate to operations and compliance as well. That being said, it is a little bit different, even though we tend to use the same vernacular. We say they're kind of the opposite internal audit. It's important to think that when they work specifically for one client as opposed to a large series of clients, that their job is going to be a lot different. So big difference between external auditors. External auditors tend to work on multiple different clients, but have the same responsibility every client. An internal auditor works for a single person, single entity, that's their employer, but they do a lot of different things for that employer. So that's something to consider as well when you're considering career in auditing. The Institute of Internal Auditors has a code of ethics. There's 4 general principles in this area: integrity, objectivity, confidentiality, and competency. Okay. And we've seen a few of these terms before because they're very important to the external audit as well. So some of the responsibilities and roles of the internal auditor: evaluating risks and controls. I would say this is probably their primary responsibility, as this is something that's going to be very relevant to the external audit as well. They're going to review compliance, which, remember, compliance is consistency, where making sure that they're following the laws and regulations of the industry in which they operate. They're going to perform financial auditing, which is basically kind of a miniature version of what the external auditor does, but they do that on a periodic basis. But they also perform operational auditing, and that's basically where the paths of Dr. Otero and myself converge. Is when we start looking at what happens on a day-to-day basis and making sure that those follow the best standards and practices for that particular company. Some of the work performed by internal auditors is directly relevant to the work of the independent or the external auditor, and we've already alluded to this, but it bears mentioning once again. We would love it if the internal auditor does a fantastic job. If we as the external auditors would love it if the internal auditor does their job well. Because if that's the case, that generally means that they've assessed risk and they've adopted appropriate controls, and those controls are working properly. That being said, we do have to consider some possibilities, some scenarios. What if the internal auditor cannot be relied upon, or what if there's problems with the job they do? There are 3 factors that we consider. We consider objectivity, competence, and a systematic and disciplined approach. Objectivity is obvious. If they're basically having to report to the management and management is telling them what to do, their job cannot be reviewed as objective, or their responsibilities cannot be reviewed as objective. Competence: if they really don't know what they're doing, it's very hard to take any of the work that they do seriously. And then systematic and disciplined approach: can we understand what they're doing? All in all, having an internal auditor on a client that does a job really, really well is a boon to any external auditor. One of the biggest advantages is that will actually reduce the scope of the work that we have to do. It's an interesting story. Back 20 years ago, when the PCAOB was founded and Sarbanes-Oxley changed the nature of auditing, internal audit work cannot be relied upon by external auditors. So what do you think the environment was in that situation? How do you think that the clients felt when they were said, oh, we've got these internal auditors who have done a lot of the work for you, and the auditors came in and said, yeah, we can't use any of their work? How do you think the clients felt? They were a little bit ticked off. It's like, yeah, we've got this redundant function that you're just ignoring. Okay. How do you think the auditors felt? They were thrilled. Well, at least the partners were, because they were making a lot more money because they had to do a lot more work. Okay. Now, the people who were working auditing, they had to work some long hours because they had to do all this compliance. I will say it was a really fun time to work in auditing because we basically ate out at lunch every single day. And we also ate a lot of dinners because we were working late nights. That was not so much fun because I kind of wanted to go home. But having everything paid for like the first 2 years of my career was pretty cool. So yeah. We're not going back to those days, however. We are going to rely a little bit more on our clients. So, all right, that's it. We're done for today. Homework on Friday. I'll see you all then.